here's our agenda today. As I mentioned, Chelsea and I will be having a conversation. She's from Core Solutions Group. A quick LeanLaw Accounting Pro update, and we're going to do less time up front this during this meeting because I want to allocate as much time as possible for my conversation with, and I'm having to admit people, so I'm multitasking. We'll also be doing just a brief overview and some enhancements related to our product, specifically some revenue by attorney report and some other things there. So a few announcements before we get going. So upcoming in our webinars, we're going to have my third series, my third webinar in a series with Lauren Fogelman. It's 3 ways to stop attracting the wrong clients. In just a moment, I'll paste in some links to that. I'll paste in some links into both the previous 2 that we've done. The most recent one that we just did in mid-September was Increasing Your Value, How to Create Irresistible Packages. And then this November one is 3 ways to stop attracting the wrong clients for your business. So that's some really excellent guidance on coaching. In our future LeanLaw Accounting Pro meetings on mid-November, I forget the exact date, I think it's the 11th, we'll be speaking to Brian Kennel from Perform Law. I'll send a link over to his firm. That is another legal management consulting firm. They deal with larger law firms, so they're truly dealing with mid-market. So they're focused on small, 10 to 15 firms all the way up to 100-person firms. It'll be very interesting to hear Brian's perspective on essentially the reporting and the services he provides and sort of where he thinks the industry is going. We'll end the year with our annual LeanLaw, the year in review and what to expect in 2021. I'll invite my 2 co-founders to that meeting, Gary Allen, our CEO, who will speak about the business. Fred Willerup, our CTO, will speak about the product and the direction of the product, and I'll speak about sales strategy, other things that I speak to. And then QuickBooks QuickBooks Connect. We are a sponsor for QuickBooks Connect, so we will be hosting some content. We're also looking with the Intuit Advanced marketing group to do some parallel content similar to what we did last year at QuickBooks Connect during that day. So we won't necessarily, we have some participation in the formal QuickBooks Connect, but LeanLaw with the QuickBooks Advanced team is scheming some sidebar content specific to law firm, accounting, law firm performance. So, okay. So I want to ask Tracy, I guess I'll go to product updates first. So I'm going to get out of this, escape, and just talk a little bit about some product updates. And again, I'm sorry I don't have multiple screens. Again, I'm traveling, so I'm having to do this a little ad hoc. Accounts receivable page. So I'm going to open up my LeanLaw tab and show a quick report. We've added 1 report under here now. So under the revenue reports, one of the challenges that law firms were having is that the attorneys wanted to see live accounts receivable data. And then the second sort of challenge or request was to see that data, but to see it showing some aging. So this report now, you can see I could narrow it by being the responsible attorney here, and that narrows it to the matters that I'm specific to. I can see it by matter or by client, but now we're showing, and I apologize, my data, this fictitious law firm is doing good with their aging, but you can explicitly see now, and I drilled into Coastal. If I go back to that report and click it again, you'll now see this receivables report. And that's for the specific attorney, so they can see, what's 30, what's 60, what's 90 days in aging, and have that data be live in real time. And remember, if anything happens in QuickBooks, meaning a payment's made, or whether you make that same payment in LeanLaw, that will be updated immediately. So that's one of the items I wanted to show today, which is this receivable report. I now want to get into some additions that we made specific to the enhancements. We've been talking about 2 items that you see what's next, Microsoft 365 initial development and adjustments and write-downs. We've had to push that back a little bit from a development perspective because In full transparency, we had a client that really wanted some additional features in the revenue by attorney reporting, and we made a decision to move some things around to meet that client's needs and augment what we're doing. So when we look at what we did with revenue by attorney, I want to point out a few different items that we did. The first is allocation details, the underlying data that makes up these revenue reports. I'll show you how you can access that data. Second, referral income tracking, which means a second layer of how law firms might track referral income, or track income for attorneys, and it's somewhat specific to those practices where they essentially receive income by referring an attorney into the law firm. They get a little piece of that lawyer's income. And then matter-based origination override and custom origination for originator uses. So two other sort of specifics with origination. Let me just show you a little bit about what that looks like. So just looking at the back end, I'm under the settings tab in LeanLaw, under the reports, and you can see historically all we had was a macro number for the entire firm as to what origination would be. Origination is the idea that if Tracy and I are partners and Tracy brings in or originates some work, but I am the responsible attorney or working attorney, Tracy gets some compensation. It's based off the HAL and DOR attorney compensation models, which means you have a finder, the originator, a minder, the responsible attorney, and a grinder, who's the working attorney. So we just used to have a fairly simplistic architecture where you had one number for the entire firm. And then, of course, the firm could take some overhead. Now what we've done is being able to allocate that at the user level. And then, again, add referrals. Referrals just means that someone's taking a piece of Fred's work. So we can assign that piece by just adding a user here and say, okay, referred by, Frank Law, and they get 1%. So that allows us a more sophisticated model as how we look at the compensation of the attorneys relative to this fundamental compensation schematic origination. What that looks like here is now when I go to my revenue attorney report, we're seeing more data fields. So we're still seeing the classic what was billed, what was collected in this period, what that attorney's share of that billed and collected is, because again, that attorney might have lost some money because of referrals. We see now some income that attorney originated, any referral income, I don't have good data here showing it, the adjusted share, which means the share plus origination referrals. And then this other feature adds the allocation of expenses. So if you want to allocate expenses specifically to an attorney so that you can deduce those, this is all done, of course, in real time and can be drilled into if I click into anything and see the specifics of where that income came from. The other item I mentioned is this allocation detail. This is just simply a CSV file that will show all of the underlying data associated with the report you're seeing right here. Many folks want to take that underlying data and pass that into Excel to do some advanced or different custom calculations. So data is always accessible with the detail, but then we've now added some enhancements here. The other feature that'll be here in just literally a week or two, because we're just wrapping it, is at the matter level, we can identify who the originator is. Now we can set matter-specific origination. So if Harvey and whoever this responsible attorney is say, hey, I want to cut a deal on this specific client, we can allocate that deal and say instead of being the standard 8%, it's going to be 4% or some different number. So we're adding more functionality to the revenue by attorney report because our clients are really needing and wanting it. Feel free to ask any questions there in the chat if there are some. And then I'm just going to mention this and not demonstrate it. We added some additional timer functionality. Some folks wanted the ability that when they stop a timer, they want to be able to stop, capture that time entry, the timer, but keep the timer open, may not be active, meaning it's not tracking time, but it's open so that they, at a later time, can continue that task. Many times lawyers are doing a task over a series of days and they want to get a snapshot at a stopping point. grab that as a single time entry, keep that timer open for efficiency, and have that carry through. What's coming next, which is important to us, is of course is Microsoft 365 and adjustments, and it is next. It's been slated, and our tech team is working on both of these actively right now. The other thing that's worth mentioning, I'm going to come back to my demo, if you folks are familiar with this, is custom form fields within QuickBooks Online Advanced. So custom form fields are another tracking mechanism or data tagging mechanism within QuickBooks Online Advanced. It's a specific feature to Online Advanced. Working with the QuickBooks Advanced team, we identified this as one critical feature that we wanted to bring out with the LeanLaw QuickBooks Online Advanced partnership. And so what this is going to allow you to do is, if you add a field, you can see all of the variability of how you want to tag it, how you want to name it, what type of information you want to tag. So on a specific line item or on an invoice level, you can begin to add another data layer. That data layer is obviously can be very critical in advanced reporting. LeanLaw will then see that advanced custom form field in the similar way that we use classing, such that a line item, an expense, a fixed fee, or a full invoice can be originated from LeanLaw, but then tie into these advanced custom form fields. And that's all a derivative of reporting. One note, the API is limited in the beginning, and it causes two shenanigans for LeanLaw. The first is, where in classing, we can actually produce a new class item from LeanLaw, meaning if we have a user, we brought them into LeanLaw, and now we want a class revenue on the user, we can originate that class from LeanLaw. In the first iteration of custom form fields, you'd have to add the custom form field in QuickBooks, and then from LeanLaw, tag it back in and associate it in LeanLaw. The second sort of shortcoming, which is frustrating, but will get changed in the months to come, is that it is not line item based in terms of what the API gives us visibility. So it's going to be invoice based, not line item, but we've clearly articulated that's a shortcoming and needs to be addressed, and they're very receptive to evolving this feature. And it's not that you can't do it in QuickBooks, it's that the API, the communication layer between our two programs, don't allow it. Okay, I'm going to put this away, and I'm going to turn it over and ask Tracy. We have a question of the day. So Tracy was asked by one of our LAPs to speak to a specific question. So Tracy, I'd like you to jump in and answer that question and any announcements that you might have specific to the LAP program. And I'm going to stop my share for a second. Go ahead, Tracy.
Okay, sure. Hello. So first, I want to thank everybody who has been super patient in waiting for me to finish with course 2 in the LAP modules. I know a couple of you have given some head starts too, and you've been wonderful and really, really patient. So I appreciate that. Hopefully that's on its final leg of its journey and should be all out by the end of this week. So thank you to those of you who that applies to. Next, let me answer this question. This question was from Cecily Wilson from Accountiful. And the question was, any advice on how to keep a clean and tidy client advanced cost account? It's a good question. So there's a couple things to consider. The first thing I thought of was conformity. So I think it's helpful in creating the expense in QuickBooks to kind of be consistent in the way that it's entered, specifically as it relates to the description. So some firms, for example, have clients with multiple matters, and even though they can assign the specific matter to the expense, a lot of them find it helpful if they have a little extra in their description area for some extra identifying information. So whether it's like a docket number or a claim number, or maybe like an address in the case of real estate dealings, having that info in the same place within the description is handy, especially if you're scanning down a list of expenses. So in LeanLaw, even though the matter is right next to the expense description, if everything's in the same spot and someone doesn't really know it by the matter name, but is maybe specifically looking for a docket number, they're able to see it if they know everything's maybe like either at the front or at the end within that description. So that way it's just got something, other than just saying filing fee, it might say docket number such and such filing fee. Then the other thing is to kind of keep an eye out in the LeanLaw part in the expense list for things that just kind of sit around for a long time and don't ever get billed for whatever reason. Sometimes it just might be because it turns out that the firm just decided just to eat that expense and not bill it, or maybe it was an old expense that got missed and never got added on a bill. But at some point, there tends to be some that kind of straggle out there and hang out. And so it just would be important to kind of clean those off that list if they're not going to be billed. And that's pretty simple. Just by clicking on the expense and then clicking the Don't Bill This button, you can clean up the list pretty easily with that. Then, of course, the other thing in the expense tab is keep an eye out for any unassigned expenses. Sometimes it just gets missed when the expense is being entered in QuickBooks. Maybe it doesn't have a client or a matter assigned to it. So those hang out there in that little yellow box, and it's just important to kind of keep your eye on those so that they get in the list and get processed accordingly on the next bill. There's one last thing I thought of just because it happened this week with somebody. Turns out that in QuickBooks, they had their expense settings set to make all expenses billable. And that doesn't need to happen when you're putting in your advanced costs into LeanLaw. Just by nature of assigning them the category advanced client costs, they'll automatically go into LeanLaw to be billed. And what happens if that button is on, it ends up accruing a whole bunch of billable expenses that QuickBooks thinks still needs to be billed in order to clear them. So that's just another little thing that was pretty fresh in my mind because it actually twice this week that came up. So that feature needs to stay off. And I think that would be my best words of wisdom for keeping a neat and tidy advanced client cost account.
Yeah, maybe Tracy, it might make sense to write that up a little bit. Maybe we can send it out to the group as a follow-up, just some of those tips that you got.
Sure.
Cool. Okay, I want to shift gears and get to the topic of the day and the speaking of the day. I just want to make note that in the chat session, I just sent a slew of little links. One was to the speaker for November. I sent a link to Lauren's 3-part webinar series. I also sent a link to our product update page. That was September's product update, which has some of the things I covered. But the last thing I sent, which was a really good thing, which is a nice segue, I met Chelsea because we have a relationship with Gravity Legal, a new feature that we did for electronic trust requests. And I listened to her. Actually, it started with Fred. My CTO listened to Chelsea. He's like, man, you got to listen to this person. She's amazing. So I went to Gravity's podcast and listened to it. And I was like, I'm not trying to shine you, Chelsea. I was like, I got to meet her because I loved what you spoke to and how you spoke to it. So I went to Dan Lear, who was my counterpart at Gravity, and said, can you make an introduction? And so I posted that podcast because I think it's worth listening to. Now that one is geared more towards a legal audience, meaning to the actual lawyers, but nevertheless, I was really stoked to do that. So let me introduce Chelsea. She is, I'm going to get to my meeting notes a little bit here. So she's the founder of Core Solutions Group Incorporated, and she's nice enough to join us here today. And I'm going to kind of put this into a 3-part conversation just to give you folks a sense of where I'm headed with this. I really first want to establish Chelsea's sort of credentials and how her career journey and how she came here. I'm then going to talk pretty extensively and ask questions around sales engagement, that beginning workings of a relationship with a client. And lastly, we'll talk about, reporting, and once an engagement has actually happened, how does that arc go, and what are some of the key learnings there? Now, Chelsea will have, I didn't know this coming into it, but she actually has a workshop. She's going to speak to it. So at the end of this, if you're liking what Chelsea's speaking to and you wanted to connect with her more, she's got a workshop that she'll speak to. You can do it right off the top, Chelsea, just so you have a sense of it. That we'll send out a link as a follow-up to the group so that you can engage with her more and learn more about what she does and learn from her work. So, Chelsea, I want to start by asking a question, which is, what is a chief financial architect? What does that mean?
That's a good question. Chief financial architect, when I went into business, I was coming out of 6 years in the accounting world. So I've been in the accounting world for a little over 10 years now. And to be honest, I was just tired of the boring titles. And so I started thinking to myself, like, what am I really doing here? And my purpose was to reveal and map out, what a client's financial positioning was and how they can clearly see the roadmap in front of them. So we're building this financial structure for them, right? It's not just about what we do as bookkeepers, accountants, and CPAs. It's about the retirement planners and the attorneys that they work with for their business and estate planning. We get so wrapped up into our actual businesses that we forget we're in here to get out profitably, right?
So, I was looking at your LinkedIn bio when you came in here, and you had done a lot of things. So just kind of walk the group through kind of some of the things you did just at a high level, but most importantly, how did you end up at law? I mean, I know you wrote it, there's a story that you write in your about on your webpage that maybe speaks to a little bit about it, but kind of tell us like why law, and how did you end up here with this focus?
Yeah, so going back into how I even got into accounting, it was by total accident. My generation, everybody told us that we need to go into the healthcare industry because by the time we went into the workforce, baby boomers were going to be entering, the healthcare industries and they were going to need us. So I did what they told me to do and I went to college for healthcare administration. And in my second semester, there was this accounting class and I had no idea what it was. I'm like, computers, numbers, both, coding, I don't know. So I started asking around and everybody I asked, I don't know if it was by happenstance or what, but everybody was either failing it, taking it for a second time, or changed their degree because of it. So I was like, crap, I'm gonna have to do something else, right? But I gave it a shot anyway, and it made 100% sense to me. Like me in accounting just jived. So I'm like, okay, I should run with this. And from there, I got an in-house accounting job where I learned my street smarts. So I know I believe in the difference between book smarts and street smarts and, whatever profession you're in. And, went to an accounting firm, made VP there, decided that was not the firm for me. And now here I am, I've started my own. And as far as why attorneys, so that's a really interesting question. And it's a question that I think all of us bookkeepers, accountants, and CPAs that deal with attorneys, everybody's like, why would you want to deal with attorneys, right? They're jerks. There's a stigma around attorneys where, nobody wants to deal with them. And so I did my due diligence. I looked at the industry and found that there are financial nuances in the industry, being trust and IOTA accounting, right? That requires a certain level of expertise, which is what a niche is, right? You get into a niche and you find out those little nuances within your niche and you become the expert on them. And the second main reason that I went with attorneys is because the tax and accounting world and the legal world have a lot of parallels, not only in the mechanics of how we go about doing our work, like timekeeping, billing, dealing with clients, but also a lot of the psychology that happens between the two. Both industries deal with government agencies that are slow to move and slow to react. And sometimes as business owners in these two fields, we can take on that mentality as well. And I run into a lot of attorneys who are very technology avoidant. Now that COVID has, come along, we see these government agencies becoming more tech savvy. We see law firms and the courts becoming more tech savvy. So parallels between the two industries and having that understanding already was another reason why I entered the legal arena.
So you picked law, it didn't pick you. I mean, you were conscientious what I mean by picked you is the sense that some people stumble into it and they get enough legal clients and they say, hey, I guess I'll create a niche. You proactively said when you put your shackle out, I'm going to deal with law. So a two-part question just to end this kind of area, which is what size law firms are your sweet spot? And then conversely, or in addition to that, how do you define the perfect client? Like what is the characteristics of a client? You're like, oh my gosh, I'll take 2 of those every day. So niche, and then how do you define that perfect client?
Yeah.
And has it changed, by the way, also? Has it changed over time?
Our typical clients, they can range from, I mean, I got the guy that wears the Hawaiian shirt all day. He practices by choice, not because he has to. He's a solo attorney, VA maybe, but you know, just the one-man shops. And then on the other end of the scale, we have clients that have multiple locations and up to 30 attorneys. So right in between there is our client base. And in terms of the perfect,
you have a perfect, yeah.
Yeah, the perfect client, it really has less to do with size for us. Typically, any firm that's over that, they'll have an in-house accounting department, you know, therefore they don't need to outsource it. When I look at the types of clients that we want to bring on, I'm looking at their mindset. I want to, you know, work with those attorneys who are open to growth, those attorneys who are not stuck in the box, that realize there are other hats to be worn in their business, or that know there are other hats to be worn in their business, but don't quite know, you know, how to get there.
And so thanks for that. And let's shift gears a little bit. So one quick question. So when you work with firms, the engagement is a full outsourced accounting, meaning is that a requirement?
Not necessarily. So we now have a suite of services that we offer on top of accounting, which is budgeting and cash strategy. Tax services we separate because some attorneys have CPAs that are wonderful and we encourage them to keep that relationship. We'll just do the books. And then we also do outsourced CFO.
Okay. So that's a great segue to my next kind of area of question. So I really want to get at the beginning of a dialogue. So someone's referred to you, I would imagine you get most of your client base via referral at this point, and you're having that first conversation. And, you know, we talked a little about this yesterday, and when I specifically talk about workflow, I'm talking about what you expect the law firm workflow to be, not necessarily the inner workings of your firm, but, you know, how are you beginning to assess and present and noodle through what that client needs to do from an expectation? Because theoretically you're asking them to change, right? In theory, you know, there's probably some reason for that they're wanting to engage you. So how do you begin to lay that foundation, but not have it be the focus, right? So what's that first part of the conversation about what you expect of them so that you can be successful downstream?
You know, we do our best to meet clients where they are at. Attorneys have this prideful nature to them. You know, they're attorneys, people put them on a pedestal. They're looked at as this very accomplished, smart, intellectual individual. But the truth of the matter is most of their finances are in shambles most of the time. And that's just how it goes. So they're very ashamed to come forward with that. So we do our best to really meet them where they're at. But the bottom line is we try to take as much off of them as possible. And I'm going to speak to a stigma in our industry, which is also one in the legal industry. So the Clio 2019 report came out and said that the #1 complaint about attorneys, this is also one of the #1 complaints about CPAs and accountants, is their lack of communication. And so when we go in, we are being very proactive with them. If you tell, I'm sure a lot of us have experienced, if you give an attorney a task, you have to follow up and follow up and follow up and follow up before it actually gets done. And coming from my experience in a brick and mortar tax and accounting office when I was VP, because I'm 100% remote now and so is my team, we played this game of pass the buck. And I noticed it in dealing with other CPA professionals, and I'm just being honest here, and it was a stigma I wanted to overcome. We are a not pass the buck stops here. So if there is anything that we can proactively take off the client's plate, do for them, of course, with permission, we do that. But of course, there are some things that, you know, you need them to show up for and do. And honestly, the onboarding piece of that is the most that they really ever have to do when working with us.
But you're still asking them, I guess what I'm getting at is there tension, may not be the right word, but friction maybe, because you kind of know what they're going to have to be doing on the backside of this, and they've institutionalized, I always use this phrase, they've institutionalized worst practices. And so you're saying, hey, do something in a slightly different way. And many times that institutionalized worst practice is the core problem, and they may not be ready to move that. So is that something you finesse around and you say, okay, once I've built credibility and trust, I'll go back and tackle that? Or is it something like, hey, if you're going to work with us, these are the structures that we need to work on, and I know that we can be successful. So how do you balance that finesse?
We do. So I'm kind of like a slice the onion type of gal. I try not to peel back each layer. I just want to get straight to the point. And in my opinion, attorneys kind of receive that a little bit better. And so if it's a situation where, you know, they're using their software and they're not properly coding things or posting things, you know, we make it clear, like we can't do our job unless you do your end of the deal as well. And if it's not something that we're handling, it is your responsibility.
So when you're having that initial conversation with the stakeholders in a law firm, I want to probe around, you know, the balance between what they think is important and what you know is important, and the delta between those two. Because, you know, they have this idea of what's important, and many times that's a root of what the problem is, right? Because they're focused on the wrong thing. You have an idea of what you know is important, and what is that life cycle of a conversation, and where do you think credibility and trust kicks in, right? Because they know your brand, and they know that you've been, you know, that what you do, but that doesn't mean that you're credible and trustworthy to them. That happens in these sort of initial engagements. So how do you mitigate the balance between what they think is important and what you think is important in that initial engagement?
Okay, so let's use the example of IOLTA tracking, right? What the client has to do in order for us to fulfill the three-way reconciliations versus what's our responsibility. Is that a good example for the question that you're asking?
Sure, yeah.
Yeah. So in-house, they're keeping track of their end of things. But on our end of things, we can't do one of those reconciliations unless they do their part. So, you know, when that comes up, and I'm sure we've all experienced, a lot of attorneys are not good at keeping up with the IOLTA reconciliations, which are an absolute requirement. It's almost the #1 reason for debarment. You know, we tell them as it is, you know, the reason that we're doing these things is because this is a requirement. And if this requirement is not met and you get audited, you're jeopardizing your license.
So, so you're using that, okay, so shifting gears a little bit, and what I wanted to make a note to the group, along the way, I've got the chat window open right here, so if anyone has a question or says, hey, I don't agree or whatever, shoot that into the chat group and I'll bring it into the conversation. So feel free to participate to the greater group. So are you perceived, do you think at this point in time you're perceived as a subject matter expert, or do you have to establish that credibility in the meeting, in the initial engagement conversations?
At this point, and you know, in my journey, I've been in business for a little over 3 years now. It took 6 to 9 months for me to be known, liked, and trusted by attorneys. And it was 6 to 9 months of consistent marketing. It was being an expert blog contributor to law firm websites. It was getting on as many podcasts as I can. It was putting out as many blogs. It was posting every day on every social media platform. So at this point in my career and where I'm at, most people come to us having already heard me speak or heard me talk about things that have to do with, you know, accounting and law firms.
It took you 9 months to do that?
6 to 9 months from the time I started marketing consistently to the time that the funnel was measurable.
It's unbelievably fast. I mean, to me, I think that's unbelievably fast as to how you did that. So the law firms that are coming to you already are sort of predisposed with this idea that you can help them get. So what are just in this initial engagement, what are some of the most, I don't know, consistent or repeated needs that the firm is looking for? Like, what problems are they coming to? Is there any consistency from firm to firm, as, you know, beyond just the IELTS is a mess? Put that one aside because that's always just the obvious one. But more so in, you know, what are you seeing as the catalyst for them coming to you? And what are those sort of core things they're looking for or looking to solve? Not necessarily services, but problems that they're looking to solve.
Yeah, outside of the normals, outside of, hey, I'm not keeping the books and I should be, or, you know,
Yeah.
I want to learn about financial reports. I'll be honest, one of the main reasons, and I have an intake form that asks this question specifically because I want to know their pain points before I ever talk to them. And it is a reactive model of addressing the financials, whether it's the bookkeeper, whether it's whoever's doing it, whether it's they don't understand or pull financial reports. They are looking for financial clarity. And most often when they're not doing that, they're in this reactive state, right? Like, so they are making decisions, they're opening their bank account, they're looking at the bank balance and they're like, oh, okay, I think I have enough to do this, but then they get themselves into trouble, right? So what the underlying common theme with the people that are coming to us is, I want to be more proactive about building and growing my business. And I know I need to see the numbers, not just what happened last month or last year. I need to have an idea of what is going to happen in the future.
And do you see that catalyst of that question? I love the word, I love that phrase, financial clarity. I think it's really important. Do you see that accelerating a bit in whether it's post-COVID or whether it's boomers aging and Gen X millennials coming in? Do you see that more of an, how do I say it, more of an importance or more of attention to that financial clarity coming into law firms now? Or is it kind of consistent?
Before COVID, it's so funny because when we started marketing on Instagram, my first thought was, okay, how am I going to find lawyers on Instagram? Isn't that like a picture thing? I didn't know much about it. But we started paying attention to the people that started to follow us, and California and Florida were the two forward-thinking states that were on Instagram and that were starting to reach out to us. So pre-COVID, you know, it was kind of a location thing. Now, when COVID hit, I'm sure a lot of you had noticed this too. It turns out that people care more about their money when it's in jeopardy. So definitely once COVID hit, you know, and people realized, oh crap, I haven't been doing this thing and I should probably do this thing because I also need PPP money, right? Then they started reaching out to us a lot more. And
so,
wanting to be more
noticed it, oh, go ahead, say that again, that last piece.
And they were wanting to be more prepared because when COVID hit, some of them did not have a cash reserve. There was no proactivity in creating that cushion so that they could hold themselves over.
Yeah, what we saw at LeanLaw is we see a lot of, I mean, I was in a sales meeting last week where aging partners, a young Gen X, Gen Y kind of person taking over, wanting to get more efficient. We just see that as a very clear trend as one, meaning that partner requiring. And I think that plays into the financial clarity. And then the second is we see a lot of pressure coming from underneath as, you know, millennial-like folks are basically saying we want data transparency. Yeah. So they want better visibility to what's happening in real time. As to your point, they want it after the fact. I mean, we always get lawyers that run everything on gut. You know, I got enough cash. I kind of know what my whip is. I know what it's going to be. But I feel like that's going to, the micro firms maybe, but as we start to get a few moving players, there's more clarity. Let's shift gears and talk a little bit about, you know, engagement and reporting. So I want to talk, you know, I sort of had this question like, how do you, your onboarding process, I would imagine that is almost secret sauce. And you talked about this engagement letter. Do you do that engagement letter before you talk? I don't mean engagement letter. You said I forgot the phrase you used, but the intake form. Do you make them? Do you require that to be filled out before you take the meeting?
Yes. So as soon as they set an appointment, they get that intake form automatically. And if it's not filled out that day, we've got people following up with them every day until the day of the meeting, because I really want that form before I talk to them. And do you get any friction about people filling out the form, or is there a willingness to do it? Nope, they do it.
And that, I would imagine that form stages the whole conversation, right? Because you have all the
complete. I know exactly what's going on. I know what they need, and I know their pressure points, and also all the platforms that they're on, because that's important too.
So when we say, okay, let's go, and we talk about engagement, the first thing you're doing is onboarding them, right? And I'm sure there may be some cleanups and some other things that you have to do. But how is that process, and I don't want to get into your secret sauce per se, but how is that process communicated to the law firm per se? How do you manage what you expect of them? And, you know, is that a repeatable process that you do the same thing every time you onboard a client? Maybe speak a little bit to that, because I assume a successful onboarding stages everything downstream for you.
Yes, absolutely. So I'm a firm believer in the client experience. If you all have ever heard of or read The Disney Experience, it's a book. The client experience is a real thing, and that is so important. So when we sign on a new client, you know, again, with the way that we go about collecting information in the beginning, we can tell them exactly what the steps are. So here's going to be phase 1. This is going to be phase 2. Here's our first meeting, our second meeting, what we're talking about, what we're ironing out. So we know, we do a full scope of what needs to be caught up, what needs to be set up, what needs to be synced and integrated, and then give them a realistic timeline of how long we anticipate it's going to get them from onboarding into what I call Gen Pop.
So, and during that process, to your point, you have people following up, right? Making sure they're doing their part. So one of the things that we see at LeanLaw, and I wanted to kind of probe around this question, is that, you know, there's some energy within a law firm that says we need to modernize and change, right? They're in some antiquated thing, they want to get better for whatever reason. And there's some institutional stakeholders, so there's some institutionalized mindset and inertia around change. And typically a figurehead, you know, it's David, and David's been doing it for 15 years, and David is not happy. But we respect David because David holds all the keys to the kitchen. What are some of the tactics? Because I imagine this onboarding, you're very clear about what you're asking them to do, but you still have to get them to do it. And sometimes there's a David in the middle of everything that you're having to like noodle around. How do you overcome David's inertia? And really, David, and I'm making up David, I don't know who David is, other than it's my brother, so I was thinking maybe my brother's slow to change. How do you overcome that inertia with that person and win that person over?
Okay, so 2 things with that. If it's a very evident issue, I actually have a referral who is a hiring and firing coach who I send to my drama teams, right? You have clients who have drama. Anytime I hear the word drama within our clients' teams, I'm like, oh, you need to go talk to her because that's outside of my box, right? But when it comes to how we work with our clients, so again, we try our very best to meet them where they are at. We don't want to come in and flip their systems upside down and start suggesting a bunch of new stuff. We want to meet them where they're at, work with them until we're fluid on a month-to-month basis. By then, they see our work, they see our credibility, then we can start making suggestions that are data supported, right? So if you, even with the Davids, you know, you can't deny that saving 20 hours a month, and instead of not billing 20 hours a month, now you can bill $300 an hour for those $20. Even David doesn't argue too much with that one.
So are you saying that if you walk into a firm, and I'm just going to make this up, but you walk into a firm and let's just say they're on Juris and it's really antiquated and you know, and the firm knows and wants to move off to, you know, Xero, QuickBooks, LeanLaw, whatever, you know, whatever tools that are modern and cool. Are you saying that in your process, you're saying, wait, don't do anything, keep on Juris, we'll keep that set until we build this foundation of workflow, and then from a point of data and intellect, we say, okay, here's where we think we need to migrate forward?
Yes. Make it a process.
Oh, that's interesting. So, and so that means that you, inside your firm, had to learn the versatility of going from system to system so that you could say, okay, we need to make this adjustment or that adjustment, or is it you just take exactly what they have?
Our internal workflows, we use a software that is perfect for what we all do. And we record, it is a virtual manual for every single one of our clients with automatic triggers, which is why we can be so flexible with the different platforms that all of our clients are on.
So interesting. So that's kind of one of your, I guess, philosophies was this sort of clear onboarding process that says, we don't really make any radical changes until we've established trust, we've established data, and from that point of trust and data, we say, okay, here's some directions. Maybe change nothing, maybe make some minor tweaks. We don't come in and overhaul until we set that up. Did you start that way, or did you learn that and adopt it?
I started that way. Easy point of entry.
Oh, good for you. Good for you. Wow, you're smart.
I'm coming from 4 years at a box and brick and mortar. So my business, I started that way because I saw how it worked and how it created the bottleneck.
So let's talk a little bit about, we talked a lot about the mechanics of accounting and bookkeeping. I want to raise the dial a little bit and talk about reporting. So, you know, how, in your early onboarding, you sort of established some data and metrics that you think are important. How do you work with a client that is so cash flow, you know, focused, but knows that you've got to expand them and teach them and educate them so that you're, you know, what's that arc like of that relationship and dialogue, and what are the interactions like, and how frequent are the interactions?
In terms of looking at financial statements?
Yeah, you know, basically you're trying to, you know, we're basically talking about initially baseline reports, and we're going to get to more advanced, but before you can start talking about something advanced in the same kind of spirit of we've got to build trust in data, how do you do that same process with your reporting side of it? Meaning teaching people so that you know you can get them 6 months, 8 months later to more advanced kind of data reports.
Yeah, so I've done this in a number of ways. I have a YouTube channel too, and I create, you know, any common question that I have from a lot of clients, I create videos. We have those resources. We release them in our monthly newsletters. When I first started, I knew that I wanted to move in a direction where I could become an outsourced CFO to my clients. So what I did is every time we got a new client that was a monthly accounting client, I had an hour-long meeting with them every single month so that I could get a better understanding of what attorneys are looking for, what they're looking at, what they're missing, what their questions are, so that I could break that apart and offer CFO services. So in the beginning, we were going over the financial statements together. And we're to a point now, so if someone's not engaging in their CFO services, not only do they have the resources that I've pre-recorded and put out to the world, but every month when we send them their monthly financials, we have a static explanation within the body of that email that says, here's every report that's attached, here is the value in every report and what you should be looking at.
And when you look at those reports, obviously some of them have to do with financial performance, right? You talked about in your about page about retirement and focusing on what you're trying to achieve with your business, not sustain. But data also talks about staff utilization, staff productivity. Are you getting into the weeds and saying, hey, you know, instead of David, it's Larry, and looking at, you know, Larry's writing down time, or Larry, does that arc of that expertise get into the performance of the law firm beyond just the balance sheet and income statement?
Absolutely. So I've worked with law firms on looking at profitability per matter type, so they can see where their profits are coming from, where they need to raise their prices, if they're charging enough, and also their team. You know, who are your team members? What are they doing? Is it consistent? Does something need to be delegated? We have these high-level conversations when we are looking at the financials. And my main goal, again, with Core Solutions Group, I set out to be very proactive. So when we're talking about these financial statements, we're going through all of them and talking about what should you be looking at? Are you too heavy in payroll? Is your marketing money producing an ROI? You know, CFO questions like that.
But are you able to, so that gets back to my point, which is you just talked about 3 or 4 very sophisticated concepts about whether it's marketing ROI, profit by, you know, by practice area, staff utilization. Do you perceive in the early engagement that they're capable of having some of these conversations, or is that about layering in some baseline and then adding it in as you get to know them better? Is that the arc that you go through, or are you able to kind of from that intake form, start to have those conversations, not necessarily have them actionable, but at least identify the questions. Where does that, I guess what I'm asking is, where do you, what are the baselines, and is it a iterative building block process to get there, or are you just able to get at it right from the get-go?
It depends. Again, on my intake form, I ask questions that tell me if they're familiar with financial statements, and if so, how in depth. So sometimes we can have those conversations right off the bat. Other times it's already built into our onboarding process, because for those who are reading financial statements, more often than not, we're going in and we're revamping the chart of accounts, because we have a structured chart of account that we use for everyone. We're going through the budgeting process, and that has been a really good icebreaker for the clients that are not as familiar with financial reports and how to use them, because we're going through every single thing. So that is a real eye-opening moment for them to actually work through those processes and look at their numbers that way. So sometimes we can have those conversations right out of the gate. Our onboarding process really opens that up. And other times, I had a guy the first time when he signed up, he's like, oh, I'll go with your accounting, but I'm not too interested in the monthly meetings. I'm like, okay, all right, well, I'm going to put it in the calendar. And when we released our new suite of services and we broke those apart, he's like, well, if I can't meet with you, then I don't know. And, he went from one extreme to the other. So for him, it was absolutely a process to get to that place.
And are you seeing, as you get to larger firms, is it typically just the managing partner and the firm manager that you're meeting with? Is it one-on-one? Are you finding that other stakeholders are in the meeting? Are you finding that, you have to have almost, I wouldn't say different conversations, but you're having to feed multiple people in the firm? Or is it really a one-to-one conversation between one or two people on a month-over-month basis?
It can be a spread. Some firms we work with have a CFO, and they choose to consult with us on a monthly basis still. Some firms have multiple partners. We'll meet with all of them one month, two of them the next.
Right. And so when you think about essentially that relationship and reporting, so you've said you've established this own chart of accounts. I would imagine, does that give you the sort of technical or the accounting dexterity that it doesn't really matter what system is coming in because you're using this uniform chart of accounts? Is that kind of create the sort of,
yes,
that creates the level playing field that says, okay, everything, I can always bring it into my chart of accounts and what comes out. So what are and again, this might be a little too secret sauce, but you have a certain baseline reports that you start with. What is sort of the more advanced kind of conversations you're having with a client in phase 2 of that? Like one, I would imagine it's cash flow, maybe practice area, some really fundamental things. What are you seeing them evolve into in terms of complexity? Are they beginning to change because it's post-COVID? Is there an area that you find that people like, hey, they keep asking about this, whatever this might be, from a cash flow? Are there certain topics that seem to be brewing to the top once people develop this baseline? Now I have a sense of my financials. I now want to know, are there certain data points that kind of are creeping up in a consistent way?
So one of the financial reports that we work with with clients who engage in these services is a budget variance report. So that's one in addition to your basic financial statements that we really like to send. Beyond that, it is less about the financial statements and more about internal analysis. So this is where we get into, making sure that we're entering the data in a way that it can spit it out in a useful manner. And we talk about profitability per matter type, not just practice area, but matter type. And we've worked with a lot of law firms to take that historical data or to take the worksheets that we have them go through and even get them on flat fee pricing. Because that's the thing. That's what a lot of attorneys are trying to get to also, is to be in this place where they can utilize flat fee rates.
So you're giving them some insight to even potentially change their business model, right? So you might not start with that in the first conversation, but by the 6th to 12th month, you now have data to say, hey, here's how you might price this based on this fact. What do you mean by matter type? I want to make sure, because I get obviously practice area. What do you mean by matter type?
Divorce, for example, it's not just a divorce matter. There's contested, there's uncontested, there's divorces with order of protection,
Okay.
children and property.
Great. Okay. Okay. So two things, and this has been awesome. I have two things. Again, to the group, we're almost at the hour. So if there's a question, ask it. If not, you can follow up with me and I'll ask it with Chelsea. Chelsea, you have a workshop. I don't really know how to define it. We just loosely talked about it yesterday. So do you want to present that to the group?
Yeah, it's pretty straightforward, but we are putting together a workshop for professionals who work in this capacity with law firms. If you're interested, you can go to our website, www.yourcoresolution.com/law firm workshop. And what we'll be doing when we go through this workshop is talking about 5 key departments. One of them is the front-facing funnels and how we generate leads and convert them. The second is the importance of the onboarding phase and the client experience, which I spoke to earlier. Internal workflow platforms, pricing your services, and advisor services.
Cool. So I put the link, yourcoresolutions.com/law firm workshop. I put that into the chat session for the group. First of all, thank you. I really enjoyed chatting with you. As you leave these folks, we have a minute or two. A word of wisdom, if they were to walk away from this conversation with one nugget from your experience and success and all the wisdom that you have, what would you share back to the group?
Oh man, I always hate it when people ask me this question because we talk about all these cool things and I have to boil it down to one. I honestly don't know.
Think about it, and
yeah.
You can think about it. And so let me ask the question in a different way. So if you said the link was law firm workshop, I'm trying to actually pull it up.
Yes. Yeah. So here's something, right? And I'll pull this from Marcus Lemonis. He's the guy from The Profit on MSNBC. It's a show. He says that people don't buy businesses, people buy processes. No matter what business you are in, and I tell my clients this too, processes are what keeps a business going and what allows them to scale. So whether it's you inside your business creating SOPs, standard operating procedures, or advising your clients, and that's what I see on my end with a lot of our clients too, right? They don't have SOPs. They rely on people, not processes. So I'll take that and I'll give the credit to Marcus Lemonis.
I think that's really smart. And hey, Chelsea, go in the chat just real quick and type that. Oh, here it is. Erica actually fixed it for me. Thank you. I'm going to just post it again. I had a typo in it. So I think that's really astute. And the thing that I learned today is two things. I can't believe that you created yourself as an expert in 9 months. That's an awesome feat of work that you did in SEO, because SEO is really hard. But the second thing I think is awesome is that you're really clear about these workflows and uniforming the chart of accounts, and it just seems like it makes you so nimble that you can have a conversation with any law firm and add value immediately, because it doesn't matter how they bring the data into you. You know what to do with the data and to get it back to them and have this meaningful conversation. And I would imagine that really brings a lot of joy in your work as you move that conversation and that relationship from the early days of just making it work to the latter parts about having meaningful and probably emotional, I would imagine at times, conversations with these law firm managers and lawyers about how you're making change, because your aspirations are very similar to LeanLaw's in the sense that LeanLaw started in some of our early marketing was about lowering overhead so that lawyers could do what is joyful to them, whether that's law, whether that's community service, their family, to lower the yoke of overhead so that people can be free to make choices and do what they want to do with their time and make it the most. So I really appreciate what you said. So thank you so much for everyone for joining us today. Chelsea, thank you so much for your time and intellect. I really appreciate it. And we'll continue to talk again. So I'm going to end the webinar unless anyone has any questions. Thank you all, and we'll be here in November with Brian from Perform Law. Okay, have a great day, everyone. Be well. Remember to vote. I don't care who you vote for, just vote.